So today I wanted to talk to you guys about fractional reserve banking and full reserve banking, because I think there's a lot of people correctly saying that fractional reserve banking is absolutely horrible, especially when the state uses it. And there's a lot of downsides. I do want to touch about what a free market would look like as far as banking goes. And of course, this is not a perfect scenario because we've never had a truly free market economy. But it does raise the question, if we did have free markets, would fractional reserve banking be allowed? Would it occur? I mean, obviously it would be allowed, but would people utilize it? Would it be the main thing still or not? So first of all, let's just define what fractional reserve banking is. It's when you take, like a bank gets a deposit, let's say somebody puts in $100, they can actually take that money and lend it out at multiples of whatever that, so it goes above and beyond the $100, right? So that original $100 could turn into way more, depending on what the Federal Reserve rate is, right? So if the Federal Reserve rate says 10%, you can take that out and lend out 90% or $90 of that out. But then you can also take downstream, have more and more money being lent off of that same money because it's going to go back into another banking system, and it creates more credit in the system without technically creating paper currency. It's more like, instead of M1, more of an M2 perspective of where you're creating this not truly liquid form of currency or money with quotation marks. So, and this is a very difficult topic here, but I wanted to point out that it depends on how you define deposit, right? Like how do we define what a deposit is? And so in a free market system, you'd have different competing banks trying to offer potential currencies. I think most of them would be backed by some form of hard money. Hard money means backing by a precious metal, maybe gold backing, silver backing, etc. Right? So they could offer certificates. You could withdraw against that for your gold or silver. And see, one of the benefits that governments get from fractional reserve banking today, when they have a monopoly and they force fractional reserve banking on us, is that they get to create money out of thin air in some essences with the Federal Reserve and other central banks throughout the world, those who rely on a fractional reserve system. So it says that in a marketplace, the deposit itself is kind of up for grabs. And I think you'd have competing systems and banks trying to have a little bit of mixture of both, right? Some banks would maybe dabble in both. Some banks would only be fractional reserve and some would be full reserve. Some economists argue that the fractional reserve banking piece would not exist much. It's almost like a form of gambling, right? Because remember, there's no FDIC insurance backing up any of these deposits that are put into the banks. So if money's lent out and you don't have the full reserve there ready to pay back when the depositor comes back with a certificate to make a claim and withdraw the money out, the banking system can collapse. That's how we have bank runs in a fractional reserve banking system, right? And that's one of the problems with it. So the other thing is you'd have to kind of pay the bank in a full reserve system to store your money, right? Because they can't lend it out truly. And that's the other argument that some people say, that in a free market system, you would still have people choosing a fractional reserve system because they want to get some kind of an interest back in ROI, right? I mean, if they want, currently it is pretty nice, like in a stock market, to be able to buy stuff and the value of the company goes up, and I can tell it's a completely different thing. But what I'm trying to show you is there's actually like a return on interest on that. And in full reserves, the bank really cannot lend that money out. And so that's a big thing that I don't think people think through all the way. So the other thing is, with a bank, when you know the bank is lending it out through a fractional reserve, you would be able to demand interest, right? So some economists argue, well, if there was a free market system, most places would actually still be voluntarily fractional reserve because people would want to get interest. And there would be hedges in the marketplace technologically. You could get bonded or have insurance or something like that to basically cover any losses. That's not a perfect answer, right? You'd still have runs and issues inside of a free market system too. But they would try to, and we don't know all of the ways that a free market would try to handle that. So very important to say, a lot of Austrian economists are kind of divided on this. People think it's just one way or the other. So I would say that most Austrian economists that I've listened to and worked with in the past, they prefer the 100% reserve system. But others argue that people do want to yield, not just storage, right? And this is the other thing. The argument for the full reserve system is that if you're already holding on to gold and silver, traditionally, especially as population naturally grows too, if that continues, there's talk about trends, of the decline after the year 2100 in humanity as more first world countries are losing population. But anyway, we're getting away from the topic. The natural growth is for gold and silver to slowly appreciate over time. I think it's largely due to scarcity from more people and less resources. So that does beg the question, would we go into a depreciation scenario as well if the population starts decreasing? And that's, I think most economists would agree, yes. So there's going to be a breaking point at some point too, where things are cultural as far as population goes, but there's a lot of questions still about how a full reserve system would work and whether fractional would be around. There would be no lender of last resort in a free market, right? So you wouldn't have the central bank for the private individual banks to run back to and kind of have that security, we'll call it security, but there's no automatic rescue perceived as there is in today's market. So once again, going back to FDIC insurance, and even that has caps at it, and I don't know what the cap is, if it's $250,000 or $500,000 now. I like to take my money and put it into different accounts in different banks, so you're kind of protected, so you don't just have all your eggs in one basket. And I think a lot of people would do that in in a free market system as well. And there's also no real guarantees of the deposit inside of a fractional reserve, right? So once again, you're at risk for those runs. So the real crux, I think, of the debate is if you have a free market, does the fractional reserve system itself, would it be the majority or the minority? Because to me, it is like a form of gambling. You'd have to have informed consent. It's you could say implied consent's there based on if it's a societal norm at the time. But if you're just switching to that early, you'd have to inform people of that. Some people say, without that informing of what fractional reserve are, and maybe they write this up in the text when you sign up for the checking account or investment account or savings account or whatever is going to be using the fractional or full reserve. Here are the rules. You're at risk, right? But because of the risk, you get an extra percentage off of that. So I don't think it's as easy as saying a free market would ban or guarantee a full fractional reserve banking. You're gonna have people choosing a mixture of things, right? Like when freedom really occurs, there's usually not one size fits all solution. I know that I might take some of my money, 10, 50%, 20, maybe only 5% if it's really risky. And especially if there's no others kind of bonding and insurance behind this. And if that's the case, I would put some of it, like right now, I think Bitcoin could continue to go up. I don't keep all of my accounts in Bitcoin. I do have stocks and bonds and other types of investments, businesses and rental property. But the thing that is important to realize is that with the fractional reserve system, you could maybe potentially, or in a free market, you could maybe put some in fractional reserve and then keep the rest in a full reserve system, which would have more security, but you wouldn't get the same return on it as well. So I do want to say that in a statist system, like in governments of today's world, obviously fractional reserve banking is forced on us at 100%. We don't have the choice to, I guess you could say you have a full reserve, but it's different that in the fact that this is being backed by taxpayers. The risk is socially, the public is at risk where the gains are privatized. And that creates a huge conflict of interest. Another thing in the statist system we have today is the people who get the money first when it's freshly printed, say from the Federal Reserve, which is a subset of fractional reserve, those people are the more usually politically connected. And the person at the end of this, after the money's trickled through the system and it's become more devalued, it's not an equitable interchange of currency or money, once again, from the timing of which the money's gotten into the economy and sometimes retracted back when the Federal Reserve might cut its balance sheet and stuff like that. So I'm not somebody who says I completely want to ban fractional reserve banking. Some libertarians or other people out there just want to completely, they don't think FRB is at all good, and they want to completely say that you couldn't even do it in a free market. I don't think that's necessarily the reality. I think that you're going to see, if we truly ever have a free market, and this could be thousands of years in the future, you could see a mixture where you're going to still have maybe primarily full reserves, and because people expect it to already kind of appreciate, kind of like savings accounts today. You get an interest rate because they loan out the money. Well, in that future scenario, you would be backed by gold or silver, which is automatically natural appreciating. So your certificate of the claim of the deposit would actually technically increase in value. But maybe not. Maybe the contract says you don't get any of the gains, and the bank keeps that, and that's their reward for protecting your money, right? Who knows exactly what a free market is exactly going to look like, and that's the beauty of the free market, in my opinion, is that it experiments and tries new things, and it's going to be messy. We've gone through many things in life where we didn't know something, put it up to the free market, and it looked messy at first, but now down the road, it actually looks really good, and they found a way to make more security. There's a lot of security you thought it used to always have to be done by governments or states, but a lot of private security today runs things, and they have technology, cameras, et cetera, that came about that makes it so you don't have to justify the state doing it all, right? And actually it's more efficient through the private market. So we don't know everything that a free market's going to be, but I'm of the opinion that fractional reserve banking could be a possibility in a free market economy, but it's going to have a consent required up front. It's going to be riskier than it is in today's system for not just the taxpayer, but the actual person who's making the deposit. So the risk, who is doing the risk, changes in a free market versus subsidizing the losses and privatizing the gains, right? So I just hope that helps you understand my take on where fractional reserve versus full reserves would land in a free market economy. I don't think it's a good thing in a state system. Yes, it has some benefits. There's lots of things that are bad that can have other benefits, but overall, I think it's a negative, especially once again when you're the people who are going to get the money first get it at a higher value. As it trickles down, it becomes less valuable. So a discrepancy there, a gap between the individuals in the economy and where they get that money, and those who are usually politically connected, and then also the risk analysis part. So anyway, looking for your input on this. Let me know in the comment section. I will try my best to read the comments over the next week after you guys have had some time on that. But yeah, I don't think fractional reserve banking would necessarily go away. I think it would be more of viewed as a gamble, and that it would be used. I just don't know the percent of usage in a free market economy. So anyway, thanks for joining us. We'll talk soon.